Hey guys, Mike here. So, boy, what a nice day on Friday. And again, one day does not make a rally, so we'll see if it continues. And again, Mondays have been absolutely terrible so far. So we're going to see if nothing bad comes out over the weekend. Can we continue that momentum up? And this video, along with your questions, I'm going to start off by showing you, because I get this question a lot, what are the indicators you look for to say, hey, this could be a temporary bottom, or we're due for at least a relief rally, a short squeeze, all that fun stuff. And I'll show them to you because they're all just lined up together. Doesn't mean it's going to pick an exact bottom. Doesn't mean it's going to pick the exact day. But yes, these pretty much give you a good hint of what's going to happen. Also, we'll talk about, you guys asked about buy levels at the Mag 7. What are good buy levels, right? Also, things that could happen this week coming up. They could absolutely snap this market out of this funk, and you can see it just go, see you later. Because don't forget, we are coming into what? Bullish seasonality, right? This is normally when we start to move up, and April has always been one of the best months of the year. Usually, again, we're coming up 20+% move in the S&P, so we'll see if that's going to matter or not. But there are things can happen this week that the market goes, hey, that's great, boom, gone, right? Because it'll erase uncertainty, which we got a lot of right now. Also, you asked about the fear ingredient index, why it's broken, so I will show you that as well. And a good question at the end for you guys to have is always a good one. From Dr. Marcus, and I enjoy answering that kind of question. So definitely get your feedback on that one. So let's go ahead and get started on all these. Now, when you look right here, what are we looking for? We talked about this the other day, volume, right? And you can see these big volume bars. Here it says 75 million. Usually you get above 75 million, it seems like lately, on these dips and corrections and everything else. You usually get a pop-up. Okay, so volumes, I showed you yesterday, it was drying up on the way down. As you kind of look at that big spike again, we'll see what Friday's number brings us and stuff. But again, there's another one right there, and that was, I believe, a 10% correction on that one. So anytime you get above that 75 million mark on the Qs, normally it's signifying at least a temporary like relief rally and a short covering rally, that kind of stuff. So that's definitely something to look at. Others are like sentiment gauges. The AAII, oh my goodness, look at this thing. It's back in the 2022 levels, lower than the 2020 levels, okay? Or we shut down the world. So you got sentiment in the dump, and normally when you get this low, things tend to spring back. It's like a rubber band effect. What else did I show you the other day? I showed you that put call ratio, right? Puts through the roof, right? Record number of puts. Look at this one. Dip buyers no longer exist. Look at this. Stocks have gone 15 sessions without consecutive days of gains. That doesn't happen a whole lot, but normally it does. You're going to get some kind of snapback, whether it's 2 or 3 days, 4 days, whatever it is. That's usually what you're going to see, okay? You come over here and look at HYG, junk bonds. Look at the puts. I'm going to put levels in this thing. You hadn't seen this right here since 2022. And again, before that, it goes back to 2015, nowhere close to it. So they were loading puts on HYG, right? Shorting the brakes off of this high yield bond ETF, okay? You get levels like this, readings, it happens. Look at this, AAI bearish percentage presented in a different way. Up here, you get up this line, you can see at the top what normally happens. I ain't saying we're going all-time new high. I'm just saying normally you get some kind of snapback, especially once you've hit 10% pullback on the S&P. I'm sure there's a million others you could probably look at that. Also, I've told you we're oversold, all that fun stuff, okay? And so, again, I'm not going to be surprised if we finally get at least 2 to 3 days. We shall see, but that's the kind of stuff you can look for to kind of line up. Now, another question here says, what are some great buying levels for the Mag 7 stocks, and do you think they will go lower? Thanks for your hard word, or I think that's what it'd be work. But, when you look, I'll give you a couple of these. I'm going to do a bigger one this for the members. But, one, you want to space these out, right, guys? You can't be buying every single dollar it drops or every $3, whatever it is. I mean, do what you want to do. This ain't financial advice. So do what you want to do. But I want everybody to be able to do this. So you don't have to have magic indicators. You can do it on Yahoo Finance, go into Fidelity. Pull up the major moving averages, 200 weekly, 200, 300 moving average, daily moving average. Pull up your fibs, pull up, if you got a volume range, volume profile, that can show you those support areas of where a lot of volume has been coming in. And also go back in the past and look, like how much do these things drop? And again, we don't know if we're going to be in a crash or not now. Later, we don't know if it's just a correction, okay? And like Amazon drops anywhere from 30 to 55% in the crash, right? So when you're looking at this thing, you can see that right there was the top of 2021 before it dropped, and it went down quite a bit. You can go on back to other times. That's the 2008 one right there, 66%. That's really what before it was a actual Amazon now. But you can pull 2018 up. I wouldn't even worry about 2020, to be honest with you. So that's an anomaly, but in 2018, it dropped 34% or something like that. And so, if we head back over here again and just line it up, what you're looking at is levels, the moving averages. Some people believe in buying at 200 moving average. Some people believe in buying at the 300 moving average. This volume range, volume profile will even show you what levels as well. So when you start going through here, you say, well, okay, right here, 150, right? That's your weekly 300 right there. That would be a good level, okay? Go over here, this one, that's 190. That's your 300 moving average. And so, and you want to space these out. You don't buy them every dollar, every $2, every $3. You space it out so it really does help you with your average if it continues to drop. And so those are good levels to buy Amazon at, right? But it also maybe depends on what you're in at now. I mean, you might have Amazon back at 70, or you might have Amazon set at 240. And so big difference there. Another one, 127. Again, if we go into a crash, this is what you're going to see. You're going to be hitting the 300 weekly. I'm sorry, the 200 weekly, and you're going to be dropping below the 200 weekly in a real crash. Like, that's going to happen. And this thing could easily go down to $100. So just kind of keep that in mind. So those are like what I'm looking for, and I'm looking at these levels on the major stocks. And so that means if these are dropping that much, the high beta stuff is getting obliterated, absolutely obliterated. They're going down 90%, that kind of stuff, where you're going to be curled up in the fetal position if you own a bunch of those in a crash. And so, that kind of stuff is what I'm looking at, plus the fibs, pulling down the fibs from, you can pull it all the way down to the last crash and see, boy, when I get down to 0.79 and all that fun stuff, what do I want to do? Okay, so that's one easy way to visualize it. And you look at Google, same thing. I mean, this one dropped 43% in 2022, so it's going to go down in a crash 40 to 50%. That don't mean we're going in a crash, right? And so if it's just a correction, right there, you're sitting there below the 200, right? You can't hardly even see the 300, but it's right at that 300. That's a good buying level. When you come over here again, you got your 200 weekly way down there, and it's sitting at 136, right? That's going to happen in a crash. Maybe it happens in correction. I don't know. I hadn't measured how far down that is from that. But again, 136, and if we go into a major crash, especially a recession, yeah, this one you're going to be able to pick up probably sub 100 again, shockingly, but that's probably what's going to happen. All right, but again, study what they've done in the past, okay, because some of these are going to go down faster than others, and then some of them are going to start recovering before the others start to recover as well. But as long as you're separating out your dollar cost average prices, you're going to be just fine in the long run. I know there's that word out there going, but what if the market don't come back? If the market don't come back, we're in a Great Depression. Okay, we got way bigger things to worry about than that. Now, when you really pull out, you can see the levels right there. If you pull up this VRBP right here, volume range, volume profile, and you see where it's sub 100, it's like $90. I mean, yeah, that's kind of levels we're talking. I know that sounds like crazy, but yeah, that's kind of levels we're talking. When you pull up Microsoft, a lot of people are going to think this is at a great level now, right? They might be buying it up here. Some people are going to wait to see the 300 weekly, right? Which is also a support level, which is right around 331. Then you got 283. Going on another one's like 226. And so these are just certain levels. But I will tell you this right here. When it comes to the mega caps, if you ever get to buy these things when the weekly RSI is oversold, you better buy hand over fist, because it rarely happens. It rarely happens. It's like lifetime buying opportunities. Look at this. Last time Microsoft was oversold on the weekly was 2010. That's a long time ago, folks. Look at that chart. Look at Amazon. This is going to be oversold a few more times. Right here it was oversold. That was almost the bottom of 2022. And you got to go back to like 2008. So it rarely happens. And so when it does, it's big time. All right, Apple, you can see the same thing. They get rarely oversold on these really large time frames. And so keep that in mind. If you ever see that, the RSI, man, I mean, that would be awesome. Obviously, we see a crash this year and we see a recession, you would think you would see that, right? And so that would be a big one. NVIDIA, that was the bottom of 2022 crash when it got oversold. That was the bottom of the 2018 crash when it got oversold. So again, and look at the chart. I mean, look where you'd be, right? It's not, you're never going to catch a bottom. Let's be very clear about that. But yeah, those are huge buying opportunities. You better go sell your car or something. I'm just joking, to buy. But anyway, hope that helps. Next question here says, do you ever hedge your positions with long puts or sell calls for income? Yes, I do. I sell the calls against my shares, but I do not buy the long dated puts, whatever. Some people do, and that's great. For me, I'd rather just save the cash and DC in as it comes down. That's just me. But yeah, I mean, I have an account dedicated to selling cash for puts and cover calls. So it's a way to do it and earn some money and stuff. So that's how I like to do it. Let me know how you guys do it. And if you have any secrets about how you hedge it and stuff, some people really do. Now, next one here says, the other day you said the fear and greed index is broken. Just wondering how it is broken thinks. Well, when you look at this thing, there are indicators in here, right? Like, is it extreme fear now? It was at 14, like less than a few days ago. And a lot of the stuff is just stuck in extreme fear. It's been there for a while now, like over a year and a half. And you can see what makes this up, right? Like stock price strength. And you can see that right there, extreme fear. Keep scrolling down. A lot of it had to do with the bond market, really, when you look at this. But, stock price strength. And you can see to the right, the levels it's at, like going all the way back to October versus over the last like 5-6 months. Extreme fear, put call options. Finally, this thing was stuck down here at the bottom for the longest time. No bearishness, and then boom, finally, here we go. So that's extreme fear. Market volatility, again, you just scroll through these, you can see what it is, and a lot of them just been stuck in that range. So when you go in here and look, though, this is what I'm talking about. This was at all-time highs, right? This is all-time highs, and normally when you get to these like blow-off tops, all-time highs, whatever they like to call them, you're going to be in at least greed, if not extreme greed, okay? We were sitting in neutral. Like I track this every day. I put it in the morning news brief. We're at 49. That's nothing. That is absolutely nothing. Okay? Neutral. And when you go back, and again, you can look up here and see what was going on before that, and you see the same thing. Now you go over here, again, this is a over 10% crash, July 2023 right there, and then we kind of go back over here. We can see July when this happened, start to scroll down right here, and we were sitting in extreme greed. Right? You just kind of extreme grew in the 80s, up in the 80s, right? And so big difference, all right? You come back over here. Again, I couldn't do that one because I was sitting on vacation, but I can do this one right here. This is only a 6% pullback. We're at an all-time high right here in March of 2024. So like it kept bumping up like 3 times. It kept bumping up against the new all-time high right there. When you go back, we're in greed. We're sitting at 67. Before that, we're even higher than that. We start scrolling forward and stuff. So we're sitting in greed, all right? And here we're sitting in neutral before we even did this one, which is just absolutely nuts. And I will say one thing though, like I went back to 2022 and looked at this newsletter or the news brief I do every day, and boy, is it grown. Some things I found, some things the members and you guys found, but boy, I mean, it has definitely changed from that to now you have everything, right? I mean, levels, gamma levels, all the important news that comes out for earnings and everything else, the top performing sectors, all of those indicators right there, the daily option ranges, the max pain. So I appreciate all you guys' input on that. I really do. And obviously I take suggestions and maybe it'll continue to grow. So yeah, it was just fun looking back in the past on that when I was doing the research for this. So anyway, I hope that helps. Next one here from Roy says, Mike, I'm sure you understand what the administration is trying to do, but some of your listeners may not. Would you explain to us how advantageous it is for them to get interest rates to fall, considering they have $9 trillion rolling over? Also, that some deflation will bring prices down, fulfilling campaign promises. Give us a big picture outlook of how they can push policy to ensure Fed panics. Jobs come in, the long-term traffic level. To ensure Fed panics, jobs come in, the long-term. Tariffs level playing fields or increase the tax base. Lower taxes, spur spending, etc. Thanks, Mike. Really appreciate that. That definitely is a lot to unpack. I can only go off what they're saying. I don't work for the administration, and so again, I before all this stuff happened, I don't ever watch any mainstream media news because it's all BS and all skewed one way, right? But I try to find stuff, and I'm always, Twitter, my phone's blowing up from Twitter and what they're saying. So they've been very clear so far about this reset narrative they have, right? The reset is pushing the 10-year down, shifting money, cutting government spending, and having the private sector take over. The Microsofts and Googles of the world and all the factories, companies and everybody else, right? Picking up. They do the hiring, okay? Instead of having the government be, employ the most people in the country, they want the private sector to take that over. So as they get rid of these people in the government, they get shifted over in the private sector. As they cut, supposedly, I thought they were going to cut a few, 500 billion or something. But remember, to balance a budget, you have to cut the deficit completely, right? 2 trillion, because that's what balances the budget, okay? And they did say this Thursday, excuse me. Look at this right here. So Commerce Secretary Howard Lutnick just said when President balances budget, President has suggested he wants to waive taxes for those earning under $150,000. So balance the budget. And so you got to think in your mind, I don't know if they're serious about this, but you're talking about $2 trillion coming from here, right? And really, I wouldn't even say that. I'd say more like $1 trillion, honestly. Because you got to remember, we're paying, $1 trillion just to keep the debt going, right? The interest payment. So let's say you cut $1 trillion of real spending, and the private sector has to pick that up. Will they do it? We don't know. Again, we've never done this before. When's the last time you heard a president say we're going to balance the budget? The last time we had a balanced budget was 1999. Now, they're trying to push, and they've been very clear about this. The president said it. The Treasury Secretary, the Secretary of Commerce said this. They're trying to get the 10-year down because that's where all the borrowing costs come from, right? The mortgage rates. They want to free up and get the real estate industry going again. You can't do that with 5-6% 10-year yield because then it's raising the 30-year mortgage rate up. You've seen it since the 10-year started to come down. What's happening? Refinancing is going up. People are refinancing at these new rates because the 30-year mortgage came down, the 15-year mortgage came down. So they're doing that, right? The lending for all these businesses. Okay, I believe President Trump's exact words were, there's basically no money to be made and when the rates are this high. Okay, people can't get wealthy like that or rich or anything like that. And so we got to bring those down. Okay, it's hard to get growth when the companies are spending so much on interest debt. All right, to try to raise this capital. And small businesses probably can't even get loans, to be honest with you, because it's so freaking high at this point in time. And so that's what they're trying to do. And there's a lot of stuff. This is very complicated. On top of economic policy, tariffs, all this fun stuff. Okay, and understand, with the market's not the economy. The market's trying to price in, what it is they're trying to do and stuff like that. But remember, things can change on a whim. Okay, imagine if they come out and say, hey, Canada, Mexico, EU, whatever, and they'll come and say, oh, we worked out a deal. And so what does that do? Uncertainty goes away. It's cemented. Boom, they got the deal. You saw it in 2018. Rough. Major rally going into October, crash, right? So the market always finds something to rally off of. In this case, it's just trying to figure out what are they going to do. So they can change just like that. We got the Fed next week. What happens if the Fed just comes out of nowhere and says, we're going to cut, right? And don't say it wouldn't surprise you because they were cutting before this. And all of a sudden the 10-year went, F you, I'm going up. So that's the other thing. If they cut, does the 10-year go up or down? Nobody can predict that because nobody was going to say, oh, it's going to 5 and something when they cut the last few times. And the Fed sure didn't expect that, but they got it. They got the opposite of what they wanted. Okay, because the 10-year will normally follow what the Fed's going to do, but it didn't that time. So that's a whole nother thing. Okay, so there's so many different things working right now, and that's what's got the market kind of going, what are we doing? What are we doing? And so once we start getting cemented stuff in place, even though right now, and again, remember, it's politics, right? At any moment, you can see the administration say, we got to win midterms next year. We can't lose the House and the Senate at some point in time and say, okay, we're flipping. And if they come out to say, yeah, we're good. We negotiated, may not got what we wanted on tariffs. That's settled. Yeah, we've kind of done what we want to with, cutting jobs and all that stuff. And guess what the market's going to do? Ooh, more free money, liquidity, it's going up. That's just the way it's going to be, and so you can't predict that. I can't predict that. That's the way it is. And so, right now we just got to take them at their word, but that's what they're trying to accomplish, all of that stuff. And we'll see if it works out, And I'll just keep updating and bringing to you it is. I mean, it was Friday yesterday, the Canadian Prime Minister came out with a tweet, which of course the market loves, saying, we're getting close to working out a deal, right? We have no idea what that means. Maybe they are, maybe they're not. You don't know. But if they just have a deal, that's all the market cares about. Doesn't even care what the percentages are or anything else. I promise you don't. Look at any time in the past when we've done tariffs. All right. Hope that helps. Now, next one says, Mike, this is something to look at and maybe go over it on Saturday. Are we in stagflation? And the answer currently is no, because I actually had to look this up because I've never lived through stagflation, right? The last time I really had stagflation was in the 70s, and the 70s were rough. But when I read about what caused it, because stagflation is high unemployment, which we do not have, slow in economy, recession, something going on like that, and then rising prices. Well, in the 70s, what caused all that? They had high unemployment, recession, but then they had prices going up, inflation going up because they had an oil crisis, and it spiked oil prices. And then we learned the hard way when we had oil prices going through the roof. I think it was 2022. It goes into everything, and so it affects everything. And so right now, what's oil doing? It's tanking. So I mean, it's not going up, that's for sure. It sure ain't going to those kind of levels. And so. And unemployment's low from what we know. I mean, you guys are telling me in the comments you're still working, and so airports are still busy and and so and these people getting laid. Everybody keeps saying these people getting gone from the government are going to affect things, but remember they're getting paid till September, and the other people are getting paid to go retire early, so they're not even going to show up, as far as we know, and so no, they're not in stagflation. Can we? And the thing is, think about this: even if say we hit a recession, what happens in a recession? Unemployment's going to spike. Everybody's going to lay people off. And what's going to happen when you take people's paychecks away and the companies tighten their purses? What happens to demand? It falls off a cliff. So if we don't have a crisis in oil or something else, in supply chains of some kind, then prices should drop, right? And so that's not stagflation. And so I don't think so. I'm not an economist, so please put it, if you think we're in stagflation, I'd love to hear why. The next one here says, question from Saturday's video, can you provide input on financial names? I'm assuming you're talking about the charts. I will say this, if financials hold up, we're good. That's key, right? If financials start to sell off, we're in trouble. And so they started to sell off here in the last week or so. You see they were holding up when this sell-off started. But I will say one thing, all of them have this same pattern. It's not a perfect head and shoulders, but you'll see what I'm talking about. There's a shoulder, there's a head, and again, what you're looking for is to see if we start to rally up, does it form a right shoulder and start to come down and break that trend line? Or, do we break through and just start heading up and that's it and we're all good, right? And so that's what you're basically looking for in this thing. And if you look at the others, the charts are exactly the same, right? You go up to JP Morgan, it's going to be the same exact thing. Look at that. Perfect. So it comes up and forms a right shoulder, starts to head over, breaks that neckline. We're in trouble, okay? We're definitely in trouble because you want the financials to hold up. Wells Fargo is going to be the exact same thing. Look, same chart pattern. And so that's a big thing. Plus, they're coming down, they're filling that where it stopped at as a weekly fair value gap. Every one of them filled that weekly fair value gap. So it's funny, it's like all these with identical charts. So that's what I will be looking for. Again, if these start to take off and don't come down and they just start heading to new highs, that kind of tells you where the market's at. Because normally, not all the time, the financials will start kind of telling you what's going on before or ahead of time. You saw that in 2008, you saw in 2022's crash. That kind of stuff. So just pay attention to financials. It's a pretty important thing. Now, last one here, which I'd like to hear your thoughts on this one. I think I asked before, I can't remember, if you could ask some big wigs, Larry Fink, who is in charge of BlackRock, Jamie Dimon, Buffett, Tudor Jones, Ray Dalio, etc., 3 questions, and they had to be honest, what would they be? And honestly, I really just have one question, but I definitely will say this. They have to have truth serum injected into them. I need it. And I would ask Fink and Jamie Dimon, and maybe Tudor Jones, but really Fink and Jamie Dimon is what I want to know. And even the CEO of Goldman Sachs, because each administration really picks a firm to advise them. And I would just want to know, so we can get the answer out there instead of just saying, oh, I know it's true, that do you get some kind of heads up from the administration as an insider trading type of knowledge so you can be positioned correctly before they announce something major, whether it's tariffs, whether it's an investigation to a major company, or anything like that? Like, do you actually get that? I just want to know for a fact. We all speculate about it, but nobody knows that for a fact, even though wink, wink. I mean, come on. And so that's what I really want to know. If I had to ask another question, honestly, it would just be like, let me know the real secret of your success, the real secret. You don't put it in books because they don't want to tell anybody their real secret, right? And so with the truth serum, I think I can get like, here's the real secret. Like they know somebody on the inside or they just know this little tip. It just works every time. That's probably how I would do it. So let me know in the comments, like what would your questions be if you just could put truth serum in these guys and actually get a real answer? What would it be? I kind of like that one. So that's a very good question. So anyway, guys, appreciate all the questions and feel free to put more in the comments for next week's video. Tomorrow will set us up for the week. It will definitely be a big week with FOMC and a whole lot of data dropping. So it'll be a fun one. And so please hit that like, subscribe button on your way out. Appreciate you guys who share and give a thumbs up there. Think about signing for the membership. Less than McDonald's combo. Let me know if there's anything I can do for you. That's everything you get with it. And I will see you guys tomorrow.